What is the FBAR? The FBAR is an informational return, not a tax return. It is a byproduct of the Bank Secrecy Act, which was enacted in 1970 out of concern that financial institutions in tax haven jurisdictions were being used by U.S. persons to hide the proceeds of their illegal activities, evade tax, and engage in other criminal activities. The FBAR requires the reporting of foreign financial account, and the BSA specifically imposes a responsibility on the Secretary of the Treasury to promulgate regulations that would promote compliance, be useful in criminal tax regulatory intelligence and counterterrorism matters, and counter money laundering as well. Originally, the Secretary delegated authority to investigate possible FBAR compliance issues to the IRS, and the authority for civil enforcement of FBAR violations to FinCEN, which is an arm of the Treasury Department that has responsibility for overseeing and implementing policies to detect and prevent money laundering and terrorist financing. On April 10, 2003, FinCEN delegated its enforcement authority for FBARs to the IRS. And ever since then, the IRS has had the ability to investigate non-compliance with the FBAR, assess and collect civil penalties associated with such non-compliance, and use the full investigative arsenal available to the service. Nevertheless, the sole authority to clarify the FBAR filing obligations remains with FinCEN. So it is important to note that there are severe civil and criminal penalties that can be applicable for failing to comply with the FBAR filing requirements.